Hey everybody, this is Brant, and we are following up on last weekend's video. We kind of left off here with small caps. I thought we had a little bit more upside just because of this bull flag that was starting to break out. Small caps hadn't met their measured move. We had the Trump inauguration, and we had some relief that there was no day one tariff. So if we just kind of scroll forward in time a little bit, here's what the week looked like. So we did get some additional gains. We also got a little bit of rotation. So last week was very biased towards the small caps, towards value and cyclicals, whereas this week growth came in at 2.10% and it outperformed value at 1.2% by 90 basis points. So it was mostly blue chip Dow companies that outperform, but rotation is always a good thing in a bump, a bounce, a rally, and we got that this week. You can see IWM at this original bear flag that's kind of now nullified, but a decent move, and that's kind of what we were leaning towards at the end of last weekend's video, just because of the start of a breakout from bull flag here. On the subscriber website, we're also looking for a consolidation into the end of the week as we get into some really mega cap heavy earnings this week, some very important earnings for the market. So we're starting to see that too. SPY's 3C chart, or the S&P's 3C chart, was reflecting that. And if we look at this bounce over here from 2025's low for the S&P, we have really good confirmation in 3C up here until we get into this week. This is not a really bad negative divergence. It's the kind of signal that we expect to see going into a consolidation, which was my call for subscribers at the end of the week. And if we look at the price chart of the S&P, we can see that starting to form over here. We did see this kind of late day. It was like the last 10 minutes of the day rally or bid to get that all-time new high secured, and you can see that right here. But otherwise, prices kind of come down below that level, and we're starting to move into a more sideways trend, like a consolidative trend. If we look at the Dow, we have the same kind of thing happening there. So from kind of an uptrend, and now we're starting to move a little bit more sideways into earnings season. This is not unusual at all to rally into earnings season, then to consolidate into it. And then we get, day-to-day volatility depending on what earnings come out and how they do. So we might see tech, explode one day and the next day the market's down because something happened with earnings that wasn't favorable. But that's generally the trend into earnings season. So this consolidation, what we're looking for, same thing in NASDAQ 100. We can see price coming up and now moving into a more lateral trend. This could be a little bull flag forming. It's just really too early to tell, but the call was good as far as moving from an uptrend to a more sideways trend. And then, of course, IWM, which I just showed you, the small caps, which are already kind of in that lateral consolidation trend from an uptrend. So from an uptrend to lateral consolidation, that was the call on the website this week. Like I said, next week is going to be really big with a lot of the mega cap companies, Mag 7 companies, reporting earnings that will include Apple, Meta, which used to be Facebook, Microsoft, and Tesla. Speaking of the no day one tariffs, which was a big part of what helped the market this week. The market was a little bit worried about Trump maybe signing day one tariffs. Didn't do that. Helped the market. In an interview with Hannity, President Trump said, "I would rather not tariff China." That kind of goes back to the narrative of we can do things the easy way or the hard way. But we did get some interesting news this week with Apple. iPhone sales fell sharply by 18.2% year over year for the fourth quarter of 2024 in China. China's Huawei overtook Apple in the fourth quarter of 2024, and Apple is the world's largest handset maker. And it really hasn't seen sales boosted by all the AI hype, but it is best-selling phone, right? So Huawei overtook Apple as the number one bestseller in China. Apple dropped to number 3 in what is Apple's second largest market. Jefferies downgraded Apple. Their investment bank's rating on Apple went to underperform. Loop Capital also downgraded Apple from buy to hold. Let's kind of game this out. If President Trump puts tariffs on China, how do you think China is going to retaliate? I would think it's going to include retaliatory tariffs on US companies like Apple. Looking at a 30-minute chart of Apple, remember what I said about December, like December 2nd, we saw this window dressing trend of sell everything, buy mega caps. You can see Apple gaining during that period, but then it's just been an absolute disaster in terms of price action. And if we hop over to 3C and take a look at Apple, what we see is that December window dressing, and then we see distribution or selling into the highs right over here. So 3C is my proprietary money flow indicator. It has the power to contradict price. So what it is showing us over here is that into these price gains late in December around that Christmas time frame, we can see selling into those gains and 3C kind of confirming to the downside. We did see just a little bit of improvement on the faster 1 minute time frame, so it's a more sensitive. This is like a trend time frame late, kind of like on Friday, so we see improvement. Maybe some of that bad news is priced in. Apple's 200-day is just below, but in terms of actual price action, it's still actually quite bearish here in Apple. This is starting to look like a little bear flag forming ahead of earnings. So for subscribers, interweek as we go into Apple earnings, I think on Thursday, we'll be watching that 3C chart, see if it continues to improve or if we're just seeing like some dip buyers that feel like, the bad news is now priced in. But I do think this is a very key moment for really the only sector, one of three only sectors that really matter to the market, which is the technology sector, the most heavily weighted by far. And here it is on a 60-minute chart. If I add some trend lines, hopefully you'll see what I'm talking about. This resistance in this area up here, we could say 242, doesn't really matter, it's an area. And if we actually look at what's happening down here, since December, it's kind of like a broadening formation, a right angle broadening formation. So if I were to just kind of sketch in a trend line here, you can see this right angle broadening formation. What is a broadening formation? What it represents is kind of a chaotic environment where there's a loss of institutional leadership or intelligent sponsorship. And with these lower lows and these kind of equal highs over here on a right angle broadening formation, it's also a lot of kind of knee-jerk reactions to news or to rumors. So this is telling us something about the tone. This is telling us something about the price resistance. And I mention this because we're going into a very heavy week of tech earnings or mega cap earnings. For subscribers, I've talked a lot about this kind of head and shoulders pattern, very extended or elongated right shoulder for the semiconductor index. Now, of course, earlier in 2024, the first half of 2024, the market's gains were all driven by the AI kind of narrative, and we have this pattern here that's a little bit like a head and shoulders. We have a lower high over here. So I've been calling semiconductors pretty much the canary in the coal mine for tech, especially with these tech companies spending so much capex on AI. If we roll in and just take a little closer look, there's been this range of chop. This is kind of that right shoulder area. Just barely broke about above it on Thursday and then back down below it. We have this kind of trio of moving averages, 50, 100, and 200-day around 5,100. And then we have this kind of lower trend line over here that comes in around 5,000. I would be watching these semis really closely. So next week we get into pretty heavy mega cap earnings, and that's going to be one of the key things the markets are looking for. Not so much whether they beat or not, it is the rate of change of beat. Are their beats or are their guidance suggesting that they're seeing increased growth, or is growth slowing? That's the more important thing. So you can see these companies beat and still sell off, or you can see them miss but have good guidance and rally. We also have the January FOMC rate decision next week. There's just almost no chance that they are going to cut rates. And then we have the 10-year yield up here that has bounced off 4.6% recently. So I think last week we were talking about CPI, the miss in core CPI, and a 20 basis point drop. This kicked off our current rally or current bounce that I've been talking about the last couple of weeks this big drop in yields. But we're finding support here. President Trump addressed the World Economic Forum, and he said that I will demand that interest rates drop immediately. So we are seeing inflation bounce since September. This is why the Fed is going to be on hold next week. My prediction is 0% chance of a rate cut next week. This is going to cause a big clash between the White House and the Federal Reserve. As far as this bounce and now moving into this consolidation, basically what I've been saying to subscribers is that I would either take a little bit off or I would take a look at my trailing stops over here to protect profits. As far as the theme of last weekend's video, and this is just putting aside all the macroeconomics and the economic cycle, the whole bigger picture that I've been talking about too. We're not going to go through that in this video. Looking at the price action since the election, what I've been saying is I think 2025 is going to be a much more interesting, challenging market, but also filled with opportunities and more of a trader's market. So if we look at what the market's done, like the benchmark S&P 500, since the presidential election, which is right here, there's the gap up. We've seen the S&P fill that, but what we've seen is a lot of big moves that are kind of swings, big choppy moves, lower highs, lower lows over here, a higher high over here. But the point is this big kind of broad range of choppiness. This is a great environment for swing traders. But if we look with some trend lines, we're seeing kind of the same theme actually of higher highs and lower lows, which is a broadening formation. I'm not going to call this a broadening top. We're not at that point yet. But what I will say is that it's telling us that the tone of the market is changing a lot. It's getting into a lot more chaotic, a lot more news driven, a lot more of these volatile swings. So that's something I want to point out as well for the S&P 500. We saw it in the NASDAQ and in the tech sector with those right angle broadening formations. So again, it's not about a top, it's about the tone of the market, how it's becoming more chaotic and driven by kind of news or what policies came out of the White House or out of DC. I'm not going to get into it in this video, but for subscribers, next week we'll be taking a closer look at China's DeepSeek R1 AI. So this is open source release, and from all reports, it's on par with OpenAI and 27 times cheaper than OpenAI's O1, which calls into question the hundreds and hundreds of billions worth of CapEx that have been poured into AI by the US tech giants. All that CapEx spending, and there's really no clear path to returns. I think it's at risk with this DeepSeek R1 kind of disruption. So we'll look into that and what that means for the US tech giants who've been pouring in all this CapEx. That'll do it for this video. If you liked it, please give it a thumbs up and don't forget to subscribe, hit notifications so you know when the latest video is coming out. Check out the website, wolfonwallstreettrade.com. I will have the link in the description of the video if you want to get these insights real time every day as the market is open. And enjoy the rest of your weekend next week. It's going to be an interesting one. Thanks.